Welcome to this week's Market Report with Access Real Estate Lending's Daniel Salas. And Danny, I understand there's changes coming in the new year to the Qualified Mortgage Program.
That is correct. The CFPB, or the Consumer Financial Protection Bureau, has required that on January 10th, qualified mortgage laws, or what they're calling ability to repay laws, go into effect. And it's been in the news that about 168 Congress members have signed a petition to delay this for about a year. But what needs to be understood is that CFPB does not answer to Congress. CFPB only answers to the Federal Reserve. So we believe that it's coming, regardless as to how Congress feels about it.
And what are some of the things we need to know about this?
Basically, what we're looking for is some of the same things, most of the same things that we look for today, like the borrower's ability to repay the mortgage. And the qualified mortgage underwriting guidelines could potentially be just a little bit more stringent in some ways and not so much in other ways. For example, we look at the borrower's income, we look at the borrower's assets, we look at how long they've had a job or how long they anticipate having a job, we look at their monthly obligations. Similarly to how we look at things now. Some things that are really changing are, the type of loan products available insofar as the loans that the government's going to buy. Those are going to be the qualified mortgages. And most importantly, we're looking at a maximum back-in ratio of 43%. Unless you receive an automated approval from either Fannie Mae or Freddie Mac, they'll exceed 43% of your income. But one of the biggest concerns is that a borrower may not pay points and fees, including title and escrow, to exceed 3% of your loan amount. So currently, if someone wants to put 5% down, someone wants to pay a point to get a lower interest rate, someone doesn't want a monthly mortgage insurance payment because they can't afford that monthly payment, but they have the cash to buy out that mortgage insurance right now. And then you have other title and escrow fees. So when you total 2.5 points or 2.15 points to buy out your mortgage insurance and you want to pay a point, and then you have title and escrow fees, obviously you're already exceeding that 3% threshold. So the only way to compensate for that 3% is to have the bank or the seller credit you for those costs to offset the 3%. And what does that mean? Higher purchase prices and or higher interest rates to compensate for those differences.
And I can imagine all of this will be sorted out when I head on over to Access Real Estate Lending.
Absolutely correct. We've been educating real estate agents now for about 3 months insofar as the changes that are going to be occurring and how that's going to change their contract writing. Sellers need to be prepared for this. Sellers may need to be prepared to kick in a little bit more to move their properties. And if the values can sustain that, then fantastic. But again, with higher interest rates, buyers will be qualifying for less homes. So there needs to be that understanding in the market now so that we're prepared for these changes on the 10th.
Now, do these changes only apply to QM loans or to non-QM loans as well?
That's a great question. Yeah, qualified mortgages only. And there are non-qualified mortgages, meaning maybe they don't meet one or two of these guidelines. But if not, these loans are going to non-qualified mortgage investors, and they're going to want to make more than what the government's making on these bonds, so those interest rates will be higher. Their rate of return will need to be higher, so the rates will be higher.
Very interesting. How are other agencies handling this?
So the California Association of Realtors right now is educating their agents that there's not much to worry about. And, they're right. There isn't much to worry about at all. You just need to be prepared and know so that you don't get stuck in the middle of an escrow and not have the ability to close, or your buyer has to change from a qualified mortgage to a non-qualified mortgage, and therefore their interest rate's changing. So in order to be prepared, it is more important now than ever to make certain that buyers are underwritten and approved before going out and searching for that property so that the agents know how to write their contract.
And, of course, any other information, we can find it at Access Real Estate Lending.
As always.
Okay, Danny, thank you very much. We'll talk to you again next time.
Thanks, Matt. Happy holidays.
For more information on the QM loans, contact Access Real Estate Lending with Daniel Salas in Chico at 897-4090, Paradise 877-5122, online at accessloans.net.